Everyone's focus when they come to the market is buying strategy. Everyone wants to have that next special indicator or that special pattern or that special signal, but really all of that is meaningless without a proper sell strategy. And what I mean by that is, again, there's no special single tool for selling that works. I mean, if you look at all the buy patterns we used, a lot of things I've discussed is really about how to put things together to work in harmony, unison. Things like trend lines are not exactly earth-shatteringly new. It's really how it works in a total system that's important. And selling must absolutely work in harmony with your overall strategy objectives, or you're just not going to be able to reach your goals. So essentially, if you're a trend follower, selling for small gains is going to completely undermine your system. You're going to take all of your losses, and then as you finally have that big trend that's developing, if you sell too soon because you're really hungry to lock in a profit, you'll miss your opportunity to really advance your portfolio, and then you're just stuck with a lot of losses and gains that are not big enough to offset them. But before we jump into all the rules and the different patterns, let's review what are our selling principles. So when we're buying with fundamentals, we're looking for a persistence of trend. The past numbers really just show that probability of trend, that we're going to get that earnings growth and that sales growth to continue into the future. And stock price is really driven by the expectations of the future. As we saw earlier, sophisticated investors with deep pockets and big fund managers always seem to have a few months of advance notice over most individual investors as to what the future course of the stock is going to be. And I alluded to that when we spoke about fundamentals earlier. But if you take a look at this next image from The Atlantic, this is just one simple way that they can kind of get an idea of what's coming up in the future. They use satellites from space to judge retail flow at stores. And so you have to really react to what the price action is, because by the time you realize that the fundamentals are no longer keeping up with their growth expectations, the stock will already have taken a real beating. Once growth is priced in, even if there's not a big slowing of growth, but if it's just priced in, people just overpay because of excitement or enthusiasm, that will be enough, really just that unwinding of that enthusiasm and that excessively high valuation that was placed in the stock will be enough to cause a significant decline in the stock price. So it's really important that you take a look at the whole picture, but really that in terms of selling, you react to technical signals. And we have some signals. Not every stock's going to be a major winner, so we have some rules to look at when the stock is just not acting like a leader to harvest some short-term profits. And then after, we have some signals to really notify us that we have an end of trend situation going on. It's time to exit the stock and exit for good. And the market will deliver those signals to us once you know how to recognize them. Don't take my word for it. Let's take a look at some examples, some charts, and see what did price action do prior to earnings turning negative or earnings growth turning negative. You'll see that if you were really just waiting for those numbers to come out, that you probably were going to be suffering some rather significant losses. Let's take a look. So here we're going to take a look at Align Technology. This was a real big winner back in 2017, and actually it's still strong to this day. And you can see that as this big uptrend took off, it happened as earnings were really accelerating from negative 2% to plus 18, plus 37, and so forth, up to 102% growth. And that's really what propelled this massive stock run from about $100 to almost $400. However, if you were enamored with this stock and you were convinced that this stock is the future and there's just so much more growth, by the time you saw that first print of only 1% earnings growth, I mean, you didn't even deliver negative earnings or negative growth, you just got down to that 1%, the stock had already fallen 55% within 4 months prior to that print coming out. Now, there are a number of signals that you'll notice here afterwards as we learn them that show that it was time to exit the stock, but relying on fundamentals, which is really a lagging indicator, just would have been of no use to you, and you would have suffered a massive loss and probably the majority of your gains of the stock advance. That's not isolated to Align Technologies only, but if you take a look at IPGP, we can see here again, we had that accelerating earnings growth. That's such the recipe for massive stock advances, where you went from $80 to almost a triple here to $260 in a relatively short period of time. We're talking about a year. And if you would have waited for that first negative earnings print of minus 13%, you were down 49% within 9 months prior to that print coming out. Again, if you would have waited solely for that kind of earnings change, it would have been way too late, and you would have given up the vast majority of your great stock profits. Here's New Relic, another perfect example. We had this huge earnings increase here. Again, we had acceleration from 156% to 400%. And you had the stock really rocket from the $40 range to over $100 in a short period of time. And that first negative earnings print came out 18 months later, but the stock had already topped 18 months prior, and you had a 42% decline, which really accelerated after that print. But you had a 42% decline in really a long period of money that was not doing any service to you. Sorry. So, and also a long period of where your money was of no real use to you, not being productive. And there was no need to really wait for that negative print. The market had flagged multiple sell signals along the way. You can see the accumulation life cycle of the stock was really clear here and very similar to Netflix when we looked at earlier in the course. And the topping pattern, as we'll notice, had a lot of these sell signals come up on the right side right here. Here is Pets. Again, another similar story. We had this really great advance from $20 to $50 in just such a short period of time. And you had this great earnings acceleration that really propelled this massive move higher. But investors kind of could see that it wasn't going to continue, and you had your first negative EPS growth about 1 year after price peaked, and you were already down 60%. So I think so many people that become enamored with growth stories and see this fantastic move in the stock price just keep telling themselves that don't worry, the growth is there and it's a great company, and that really doesn't matter. By the time you figure it out, by the time the numbers are out and you can really see that, oh, I guess I'm wrong about that, you'll be absolutely crushed. So I just really wanted to make it clear with these different examples that selling is really a technical business. Anyone who's not relying on technical analysis and market cues for selling is missing the point that, again, you're looking for continuity of trend in terms of fundamental growth when you're buying a stock, but you won't know when it's not going to continue until long after it's important. So that's why in order to react to exit, to lock in your profits or to prevent losses, you really need to work with technical analysis to get that down.